Good morning, guys. It's about 1 a.m., so I am making crypto videos, as one does. And we're just going to kind of talk about the basis of the near trade. Um, and I've noticed a lot of questions about how do you pick a level? How do you know where the price is going to stop, right? Because at the end of the day, what you want to do is always catch the perfect entry. And it can be really hard. And there's a couple ways to do this. So if you remember from our last video, right, what we talked about primarily was really just about drawing these order blocks, right? We're just taking all these wicks, 1, 2, 3, 4, 5, and we just drew across, right? And let's take a look. So we have wick 1, wick 2, wick 3, wick 4, right? And we'll ignore these ones for now because this is not the key level I want to focus on. We want this guy, and we basically want all of these upside wicks, right? And if we look, it's going to coincide with these wicks down here. So let's just draw a box. You guys know how much I love my boxes. And we really only have to draw this all the way across. And if you look, what I'm trying to do is fill the top side wick with this downside wick, right? And I'm just going to draw the box all the way across. And there you go. So, if you guys notice, this is going to actually hit this region pretty much perfectly. And it's going to fill this wick here, right? And you notice this wick actually gave us this reaction up there. And we can kind of mark this all off as supply, just for funsies. We'll mark this all off, right? And there's our topside resistance. This makes a lot of sense, right? If we drag across all these wicks, I mean, maybe you want to take something more like that, like this. But when it's not that clean, you can kind of just do an estimated average, and it's going to tend to work out. So let's also look at something else, and that is just our basic market structure. And what we're going to notice is something really simple. Higher lows, right? This is not too complicated to understand. Our 4-hour chart is very clearly trending up. And this is good. I mean, this just tells you the asset is pretty bullish, right? We're not making higher highs yet. So if we want to look at this from a technicals perspective, we're going to ignore the price action before. There is no market structure break here because you're only making an equal high. But you have a market structure shift, right? So you have lower low. Here, well, we'll do this in a bit of a more slow way. So let's just take any one of these 4-hour lows. So low 1, low 2, low 3. So you have downwards market structure, right? And then here you've confirmed a market structure shift because you've made a higher low, but you failed to make a higher high. So when we come back and we get above this level, now you've confirmed the break in market structure. Now this is back into a bullish trend. This by itself is not bullish. Only once you actually get above this level do you have a clear shift in trend, right? And if you look at our 4-hour chart, this makes a lot of sense. Where's the price stop within these wicks? I'm not going to talk about that so much. I want to focus on this trade specifically. But when you have a market structure shift like this, let's compare it to Ape. And I want to do Ape specifically because this looks similar, but it's not, and it's going to affect the way we trade things. So we have our lower low, right? And then we kind of have this reversal, right, where we kind of shift around, you know, right, whatever. You've got this low, you've got this low, right? And then here you've got your higher low and your higher low. And this looks good. This is the same thing, right? We can look at both examples, right? Higher low, higher low, higher low. But not really. Because if we actually look at what's going on here, there really isn't any market structure shift at all. Just because this wick happens to wick up there doesn't mean anything. What you need is a confirmation. So if we draw the wicks across this guy, if we actually look at this, there's not a single close above this key level. Just ignore that. If we put it, even here, it's the same thing, right? I mean, you tried to flip this level as support, right? And you kind of just keep fucking around, to put it bluntly. But let's just go back. We're gonna leave this as our region because this is really the key level. I mean, at least to me. It's kind of these guys up here. So we'll mark this off, and what we're gonna notice is these highs are actually really nothing at all. This is just chop because at the end of the day, you have support, which is pretty much all this down here, and then you have resistance and all of this price action in the middle. I mean, sure, we can make a little marker and call this our mid-range, right? I mean, we might as well do it. So we'll call this our mid-range, And if we, so this is the difference, right? Once you've had this confirmed market structure shift, you have to ask yourself, why is the price going to pull back all the way into like, here if it's truly bullish, right? Why is the market going to let you in now? Because people obviously can figure out this is a bullish market structure by themselves. It doesn't take, high IQ to figure that out. So what's going to happen is you'll tend to find the market will not give you an entry. And that's kind of why I was so aggressive with my bids, even marketing some up here as well. Because when something is this bullish, it doesn't let you in, right? We don't even actually touch this. We don't actually touch any of these equal highs almost at all. We really just fill this wick. We barely actually touch this support resistance reason. We can pretty much just skim it with a single wick. But let's look at something like 8. Well, this is really not the same thing. If we try to do it, I'm going to delete all my drawings for now, just the boxes, right? Let's just look. So there's our first high or low. There's our second one. So on ape, that would be this guy over here. And if you guys look, right, this thing pulled back almost completely. So the low of this, 1.16, and the high of this is 1.15. This actually gave back the entire expansion with a difference of maybe 1 cent. This is really not bullish market structure at all. And if we pull out a chart like this, and this is where it's going to start to get interesting, we want to look at a chart of ape BTC. Why ape BTC? Because this is just going to show us the performance of the coin against Bitcoin, right? So we saw those higher lows, but when we look at it over here, it actually looks terrible, right? 1, this is really not a higher low. I mean, whatever you want to call this, you could call it whatever you want. But this is actually going down, right? Our price is going up, but the actual value of the coin against the market is going down. Well, let's compare this to something like near, right? And I think I already charted this guy, but I might be wrong. Nope. Maybe on Bitfinex I did it. Nope. Okay, that's fine. Well, this is actually the exact same, right? Here's our low, higher low, higher low, higher low, higher low. And also, guys, well, the key thing here as well is we have higher highs, right? Higher high, higher high. So this is actually really bullish against the entire market, and that's pretty important. And if we look, right, on an H4 perspective, yes, you gave all this expansion back, but you've actually reclaimed this range. We don't really need to look too hard at this, but if we draw out our support over here, we've actually just kind of reclaimed this range low. I'll just drag this all the way across just so it's a bit more obvious. We've come and traded above here. And with this guy and, 8 BTC, right, we're actually losing. So when you want to bid something like this that isn't bullish, you have to assume that the price is going to pull back pretty deep. So let's actually look at why I'm marking off this region here. Well, first of all, that's our fair value gap, right? We have this massive expansion and the price trades all the way back into the gap. And it's also our swing point, right? Here's our wicks. This is a pretty significant movement, right? This had enough force to bring the price all the way up, and then we just kind of bled down, and then this whole area is support as well. But I'm not going to focus too much on it. I just want to kind of focus on this area. This one's not very obvious, and that's fine. We don't even actually need it, because what we're going to do is look at something like this. And we're going to discuss the two outcomes. Well, if the price was bullish, guys, it would have stopped here, right? Here's our upside wicks. Here's our downside wick. So this is clearly a significant swing point for the price. We can go to a 2-hour chart to maybe see this a bit better. There's our upside wicks. Then there we go, our like consolidation, and then we push up higher, and then we bounce off this level, right? And we just nuke right through. So this isn't at all the same as something like this, because this won't even let you fill these gaps. Like this thing is able to come all the way back down, right? And literally wick off support exactly. It's giving you a perfect clean retest of this level. This guy, on the other hand, won't even let you in. And that's where you start to see the difference. And this is probably going to go up only. It really is. So again, let's look at this chart again. Why does the price stop here? Well, this is your wick, right? Again, we can do the classic draw the wicks and then you get support, right? You could do this, but the reason why you want to bid down here is because when something isn't bullish, it's going to give you a deeper retest. Like, let's look at this, right? This is not holding as support. And for others, you would be stopping up there. So if something is giving you this deeper retest, it's not a bullish uptrend. That's the big thing. The price should stop there. It shouldn't give you an entry if something is truly, truly, truly going to go up only. So when we look at something like this on like a daily chart or something, how does this help us, I guess, shape our trade thesis? You pretty much are going to always get a sweep. There's really no trend. So there's no reason to be aggressive with your entry. Bid the bottom side of these. You want to be as conservative as possible. But when we actually draw this out, this is obviously a very key swing point, right? I mean, we can see that here. So assume that the price is going to give you that regap. Assume that you're going to get the entry, especially when you look at that BTC chart. But with something like this, if it doesn't pull back, right? Because here's the thing. If you got an entry up here, I would probably assume that the price would actually go here. I would guess that it would go much lower because the market has no reason to let participants win at this level. And people are going to try to bid this level because it's an obvious support, right? And the market would usually do something like this, where it's just going to nuke right through, right? And if we draw a path, you know, come to here, give a bounce, nuke right through, and then give you this page. And this would kind of be the manipulation candle or whatever you guys want to call it. When you look at something more like this with Ape, right, sorry, with Near, if we just pull up a Bitcoin chart, actually, we can do this side by side, just for fun. You guys can see this for yourself. People have been asking, how do you know when something is strong? Look how much this thing actually pulled back, right? Here's your upside, and you actually came all the way back down again. With something like Near, it doesn't give you anything at all. So when this is selling off, right, in real time, you guys can see this for yourself. When you have this price action, Near is doing nothing. Look at the difference, guys. Look how important, this is actually the most important thing you can get from this today, is when this thing sells off, the reaction from Near is way stronger, right? Here's your nuke, here's your bounce, and it's barely bouncing at all. And Near is fully recovered within minutes, guys. Literal minutes. Again, minutes. So this is just basically showing you that when you're watching the charts, guys, what you have to look at is how is the asset performing against the market. Again, look at Bitcoin here and look at Near. There's no sell-off. There's absolutely no sell-off. But you put something like Ape on the chart, and it's going to look different. It just will, right? And if we go to like the 4-hour chart or whatever, the 15-minute chart, yeah, 15-minute chart is actually excellent here because here's your Bitcoin dump, and you still haven't actually bought that back yet. Versus something like Near, where again, you've just fully recovered all of it, and you've actually traded even higher. And again, with something like this as well, you're going to notice the BTC chart just continues to grind up. In fact, I'd probably bet that this was our higher low right here. This thing is not going to stop. There's absolutely no weakness. Again, you just have literal perfect market structure, right? So what's the key thing here? One, use the short-term points to identify liquidity, right? Just by drawing, the simple thing on the chart, those little boxes, you can find the key levels. The way to assess the reaction at these key levels, guys, is to look at how the asset is doing against Bitcoin. Again, this thing is just selling off, and this thing is just not moving. It just doesn't care. Literally does not care. That is how you tell. If an alt hits support, and Bitcoin just nukes, and the alt doesn't move, when Bitcoin even catches the slightest bid, like a 100-point bump, your alt is going to send, right? But if it's going the other way, where you've longed some alt at support and the market is sending and your alt is not moving, the biggest myth in crypto is that alts lag. There is no such thing as lagging. If your coin is weak, when Bitcoin dumps, it's going to nuke. And when Bitcoin goes up, it's barely going to pump at all. Let's take another example that's really obvious of this. Let's look at Stark, right? And this thing is just going to zero. Okay, this chart looks fine, right? Again, you have a nice pump, sure. Let's look at our 4-hour chart, guys. Literally straight to zero. So what is this showing you? When Bitcoin sells off, this thing just continues to get destroyed, right? Lower low, lower low. And Bitcoin is not even making lower lows, right? So the way you assess these things is, again, yeah, not even making lower lows, and this thing just can't stop. So how do you actually use this in your trading knowledge? Long coins that are strong when Bitcoin is weak. That is the simply easiest way to trade. If your coin against Bitcoin is going to zero, guys, it's not going to go up. It doesn't matter how hard the market pumps. So, this has already been a really long video, but I think I've basically covered it. Again, look at this chart. It's just fucking terrible. It's just going to zero. Whee! We need like a little line. We need something fun here. Give me a brush. Give me a brush. Woo! Zero. So, could this break out? I mean, sure, it might. But again, that's a bet that you don't have to take. Take the bet that's strong. It's really easy. Because when Bitcoin nuked, this thing didn't. So, that's why I kept longing it. It was that easy. I just drew the box and then assumed that because the price was so bullish, it was barely going to fill the box, and I just pressed long. And now we're going to wait because it's probably going to keep going up only. There's really not much resistance sitting around here. And if you look at the actual daily structure as well, I mean, this thing is just intact. So I would expect that this just gets absolutely blown through. I'm going to bring back the old squiggle styles like Enro told me to, but if I look this on a weekly chart or something, I don't actually know. Yeah, there's really not much here. Maybe on Binance chart we can get a better picture. Yeah, okay. So let's look at a 4-hour chart, or sorry, a monthly chart, or sorry, a weekly chart. Where is this thing going next? It's going to this, right? You have this clear, take our wicks, right, guys? We're going to do the exact same thing. We're going to predict where the price stops together, guys. We're going to take as many wicks as we can. Oh, we can see that actually this is pretty much a swing point. So I'm going to assume that the price is going to not actually get that high. And I'm going to guess that we put in a nasty wick somewhere up here. And I'm just going to draw this all the way across, guys. And you and I can all wait together. If you've actually made it this far in the video, I'm really impressed because this has been a fucking long one. So we're going to draw this, and we're going to say that it goes into here. Right? And on our 4-hour chart, it's going to look very similar. We're going to do something like this, where we just flip those previous highs to support. And if you look, again, there's actually nothing significant here at all. It's just gap. It's literally just mostly open air. So once we probably get above this guy right here, these wicks, we are going to go up only. Truly and honestly up only. So that's going to conclude this video. I probably did not do the best job explaining these concepts, to be honest, but please message me with questions because it's a very, very convoluted explanation that I just gave. And I'm going to do my best this week to kind of clean this up going forward and put out some more straightforward content. So hope you guys have a nice night, and I will catch you all later.